Most investors hear $2 million apartment building and immediately assume one thing: I probably need $400,000 to $500,000 just for the down payment. And in traditional real estate financing, that assumption makes sense. But with CMHC eligible multifamily, the cash required can look very different. In this video, I want to show you why the purchase price is not always the number that determines accessibility. We're going to break down the difference between the price of the building, the financing structure, and the actual cash required from the investor. Because sometimes a $2 million plus multifamily building can require less cash in than people expect. And that changes how investors think about scaling. If you're new here, I'm Darren from DK Wealth and Growth. And if you've been following along, you know we focus on discipline. CMHC eligible multifamily investing, especially in Alberta markets like Edmonton and Calgary. Stay with me until the end, because I'm going to show you the specific mistake investors make when they compare small residential rentals to commercial multifamily buildings. That mistake keeps a lot of people thinking bigger deals are out of reach when they may not be. Most investors are trained to think about real estate through a residential lens. You buy a house, you put 20% down. You qualify based on your personal income. Then you repeat the process until the bank says no. So when they see a $2 million building, they immediately apply the same logic. 20% down means $400,000. 25% down means $500,000, plus closing costs, reserves, and everything else. And at that point, most investors stop looking, not because the deal is impossible, but because they are using the wrong financing model in their head. Here's the first big shift. Purchase price and cash required are not the same thing. The price tells you the size of the asset. The financing structure tells you how much capital actually needs to come in. And with CMHC insured multifamily financing, that structure can dramatically reduce the upfront cash requirement compared to conventional assumptions. That is why some investors can look at a $2 million plus building and not immediately walk away. With CMHC MLI Select, qualifying multifamily projects can access higher leverage than many investors expect. In some cases, that can mean financing up to 95% loan to value, depending on the project, the underwriting, and whether the deal meets the required criteria. That does not mean every deal gets 95%, and it does not mean the investor brings no money. But it does mean the conversation changes. Instead of assuming 20% to 25% down automatically, you start asking, does the building's income support the debt? Does the DSCR work? Does the project meet CMHC MLI Select requirements? Is the structure strong enough to justify higher leverage? That is a very different conversation. And this is where the opportunity becomes interesting. A bigger building can sometimes be more accessible than investors think because the financing is not built the same way as a single-family rental. The underwriting focuses heavily on the building's ability to service debt. Your financial strength still matters, liquidity still matters, net worth still matters, but the asset itself plays a much larger role. Let's use a simple example. A 7-plex in Edmonton priced around $2.1 million. If you looked at that through a conventional 20% down payment lens, you might assume the investor needs roughly $420,000 before even thinking about closing costs. That sounds out of reach for a lot of people. But when the deal is structured through CMHC eligible multifamily financing, the initial deposit might be closer to 5%. On a $2.1 million building, that is about $105,000. And depending on the specific project, incentives, builder rebates, and final structure, the effective cash in can sometimes come down even further. For example, if there is a builder rebate applied at closing, the investor's net cash position may look very different from the headline purchase price. That is the part most investors miss. They compare the full building price to their available cash, but serious investors compare the financing structure to the actual capital required. Quick question for you. When you look at multifamily deals, what feels like the biggest barrier? Is it the down payment, the financing, the deal analysis, or just knowing which opportunities are real? Drop it in the comments. I read through them and it helps shape what I break down in future videos. The mistake is trying to evaluate commercial multifamily with residential math. Residential investors usually think, how much do I personally qualify for? Commercial multifamily investors think, how does the building perform? That shift matters because if the building has strong rents, realistic expenses, proper DSCR, and a structure that supports the debt, the deal can sometimes open doors that residential financing would keep closed. This is one of the reasons investors who feel kept out after 2 or 3 properties start looking at multifamily. They are not just looking for more units, they are looking for a different financing framework. So the takeaway is this: a $2 million building is not automatically out of reach, but you have to stop judging it only by the purchase price. The real question is, what is the financing structure? What cash is actually required? What income does the building produce? And does the deal still work after conservative underwriting? That is how serious investors evaluate accessibility, not by the sticker price, by the structure. If this kind of disciplined approach to multifamily investing resonates with you, make sure you subscribe to the channel. Each week I break down how serious investors evaluate CMHC eligible opportunities, financing structures, and real portfolio growth strategies before capital gets committed. And if you want to see current multifamily opportunities targeting under $100,000 cash in, you'll find a link below where you can request the latest available projects. Also, if there's a specific financing question you want me to cover next, drop it in the comments. Thanks for watching, and I'll see you in the next video.